this mindset of the broad market individual names, how they correlate with each other?
Well, and that's a good word, correlation. And I'm going to tell you what I do in order to understand this better from a detailed perspective. But first, I'm going to tell you kind of a higher level thought. And that higher level thought is over the last few years, we've seen a proliferation of exchange traded funds. And these exchange traded funds are different than mutual funds in that mutual funds have a manager who actually is, trading this fund, changing the holdings of this fund as time goes on, changing the positions that make up this fund. Whereas an ETF is kind of like a predefined balance of these individual stocks or other assets in certain percentages, and it just stays like that. So as all these different stocks move up, so does the ETF, and as they move down, and it's all weighted. Like there might be a certain percentage that's Apple stock, a certain percentage that's IBM, certain percentage that's Microsoft, and this might represent, mature tech stock. That said, of these different ETFs and the excitement because a lot of investors and investor advisors are pushing people to ETFs because it represents diversification. You can like trade the whole technology sector and not put your all your eggs in one basket like on an Apple stock or on an Nvidia stock. Although if you did put all your eggs in one basket on an Nvidia stock, you'd be very happy right now. And so a lot of activity is happening in these exchange traded funds. And because of that, it's kind of creating a self fulfilling prophecy. So many people are liking the tech stock fund that it's in effect pushing up all the components of the tech stock fund, whether or not those components are doing well individually. So, for instance, IBM isn't quite, making its earnings targets and things like that. It doesn't matter because if people are investing in that tech ETF, IBM is going to get pushed up just like Microsoft and Apple. And so that's called correlation, and it's getting stronger and stronger. It's kind of detaching an individual stock from its actual company, targets and what the company or the business that sells that stock to the public. It's detaching that from the actual results of that company. So you're seeing more correlation targeting things towards the broad market, and therefore analyzing the broad market. And I usually spend about 5 to 10 minutes every evening just looking at the broad market, understanding what it's doing, because it creates for me kind of a tide